Welcome back to Financial Clarity for Doctors, everyone. This is Rachelle Vanderzanden here with Corey Janoff.
Hello.
Yep. In financial planning, I feel like we hear a lot of buzzwords, just like everything else, I guess. And there are some things that we hear from clients and prospective clients on a regular basis. And one of them is the word fiduciary. So we have people come to us and say, "Hey, are you a fiduciary?" And sometimes I feel like they're repeating something that they've read. Very likely that's what it is. And it's also one of those things that I don't think it's super clear what a fiduciary even is. Like, what does that even mean? And so people may want to know or be told that it's important that your advisor is a fiduciary without understanding all of the background that goes along with that and all of the different qualifications that a financial advisor could potentially have. So today we wanted to spend a little bit of time unpacking that word, unpacking the different kinds of licensing and different structures for planning that you can potentially run into, and also just some things to think about when you're trying to decide what advisor is a good fit for you. And it may not be like that they're a fiduciary. That can be a good starting point, but it's also really important that you're working with someone who really values ethics and things like that. And that can vary from person to person, no matter what they're being told to do from regulatory authorities and things like that. So we're going to go into like what is a fiduciary, different types of structures for financial planning, what to look for in an advisor, all of those kinds of things.
At the end of the day, what I imagine every client wants is, are you going to act in my best interest and help me achieve my financial goals?
Yep.
Um, I mean, that's really what we're getting to, regardless of how you want to define fiduciary. Now, defining fiduciary, it can have multiple meanings or
Yeah.
definitions. Yay, English language. We have a lot of words like that mean different things in different contexts. So if you just Google fiduciary definition, the Oxford Dictionary definition pops up, and it could either be an adjective or a noun. The adjective version is involving trust, especially with regard to the relationship between a trustee and a beneficiary. And the noun version is simply a trustee, which is basically a person of trust, that you trust the person. Um, so how does that help us? Well, let's move on. Very generally speaking, in the financial planning context, a fiduciary is someone who manages money or property for someone else. And when you're named a fiduciary and accept this role, you must, by law, in most cases, manage the person's money and property for their benefit, not yours. So you're acting in the client's best interest, not your own personal interests. So I think that's, the crux of it. What we're trying to get at here is, um, acting in the client's best interest. Now, a fiduciary, you'll often see that pop up within a 401k plan or other employer retirement plan. So if you have a 401k plan, which is quite common if you're at an employer, if you're at a hospital, it might be a 403b, more or less the same difference. Um, your employer is generally named the fiduciary, the noun version, the fiduciary of the plan. So the employer, the onus is on them for making sure everything is operating properly and in the best interest of the employees. Now, it's likely they're hiring a financial advisor, a third-party administrator, to do the work on behalf of them, but it's ultimately, the employer is the one who signs off on everything. So it's on them if there's any employees who are unhappy about the retirement plan. Now, if you're a business owner, which many of you listening are, you have your own practice, you offer a retirement plan to your employees, most likely you are the fiduciary to your business's retirement plan. Just like the buck stops you, what stops with you as the business owner. The responsibility falls on you as you sign off on everything. You sign off on the investment company being used, the mutual funds available in the plan, the fees being assessed, etc. You agree to all of it. So that responsibility, you are the fiduciary in that scenario. Um, you want to cover the next one, Rochelle?
Yeah, I think outside of those contexts and what clients are often meaning when they ask us, in the financial advising world, when you are providing ongoing financial planning and or investment management for a client, you should be adhering to the fiduciary standard. So it's not like you are a fiduciary because we are not trustees. We are not people that like are managing a trust or something like that, but we are held to a fiduciary standard, meaning that we must act in our client's best interests. Like that's what you're getting at. That's the important piece. Are we required to act in our client's best interests? And that can be subjective. Like I think that's probably the hardest part, is that that's not necessarily cut and dry. It's not like this is the only best thing for this client. If they want to like pull money from their 401k early to buy a house, like okay, maybe that's not necessarily in your best interest down the road, but maybe it is right now. And so all of these things are very complicated, and we're not making decisions in a vacuum. So when we're helping you with planning and advice, there's lots of things to consider. But there are some obvious do's and don'ts. Like don't put your client's interests, like don't put your own interests ahead of your clients. Like let's not sell them something they don't need so you can make money. Like those are the things we don't want to be doing, right? Those are very, very obvious. All else being equal, like generally you want to go with a lower cost product if that product will work and if we are confident that it is a good fit for that client. And it's not always about like the least amount of fees possible. It's very much like what product is a good fit for this client. Are they paying like a reasonable amount for this, given what they want, given what their goals are, and things like that. And then, there's very, very obvious ones like don't steal from your clients. Don't don't accept money from them that's outside of like fees and things like that. Like you can't take loans from your clients and stuff like that. There's so many rules and regulations in the financial planning industry and in like securities and trading and all of that kind of stuff. So there's lots of rules and it means a lot of things. But again, because it can be subjective, it's really important like who that person is. Like you can make an argument that something is in the best interest of a client even if maybe you don't really believe it. So I think it's important to be careful. And I do think that financial planners in general, financial advisors, there's a lot of different categories that you can fall into, and there's lots of different licensing that you're required to get in order to do those things. So we are going to talk a little bit about what those things mean and what standards different financial professionals are held to as well.
Yeah.
Yeah.
I mean, you could look at it across industries too, like using medicine as an example. What's in the patient's
Mm-hmm.
best interest? There could be multiple treatment plans or procedures that could solve the ailment that you're facing. Like if someone comes with cancer to a surgical oncologist, the surgical oncologist might recommend surgery, and because they think that's going to be the best way to do it. The radiation oncologist might recommend radiation. There could be arguments made for either pros and cons with everything. So it can get very subjective. But at the same time, there are some obvious areas where it's like, all right, this clearly doesn't seem like the right thing. This seems like the wrong thing. Let's do
Yep.
what everyone can agree is best in most cases for this circumstance. But then that's why malpractice insurance exists. Sometimes you make an honest mistake. Just like in our industry, we have malpractice insurance if something goes wrong, hopefully unintentionally. Honest mistakes happen. Um, but yeah, that's where Rachelle mentioned multiple times that the individual, I think, is more important than whatever regulation, license, company standard they supposedly are held to. Like, are they an ethical person? And are they going to do what's right for you? Um, and I mean, ultimately, it's that level of trust that's most important that, a piece of paper can't really, uh, it can kind of have some legal standing, obviously, but I don't know if it's necessarily going to make someone ethical or not.
Right. I do think regulations have also changed a lot over the last few years. Like there have been more and more regulations to try to protect consumers because I think, over the past few decades, like people have gotten taken advantage of, like that it's not always been the cleanest process. And so obviously like the government is doing their best to protect consumers. I'm going to quickly go through like a few of the different people that you may interact with in the finance industry. One of them may be like a registered representative working for a broker dealer. Before I go into all these, it's so convoluted. Just so everyone knows, if you don't follow it, you're not the only one. I can barely follow it, and I work in this industry. It's also like you could have multiple licenses that make you as a professional fall under multiple umbrellas. And so if you're working with clients, it's like, okay, we're just going to abide by like the highest standard that I'm required to abide by, basically. But a
And yeah,
registered
like our
representative.
our
Yeah.
industry has not done us or the general public any favors with any of this. Like it is very convoluted, it is messy. There definitely have been some bad apples that have, tarnished reputations for the industry as a whole. Um,
Hmm.
there's definitely governing bodies out there that are pushing for improvement, and we're behind that as well. We'd like it to be clear cut and dry, but there are a lot of nuances and it can be hard to decipher and understand. So, anytime you're trying to find a financial planner or looking for someone new, take it slow, interview people,
Hmm.
go with your
Yeah.
gut to some degree.
Absolutely. Yep. Okay. So the registered representatives, broker dealers, like they work for a broker dealer. There's always like an individual, and then there's like someone that they work for, a company. It could be like one and the same, but basically there's an institution and there is an individual. So a registered representative who works for a broker dealer, if that's the only thing that they do, then that's kind of like a broker. We're buying and selling investments. They're paid on commission, not necessarily held to a fiduciary standard. They are held to what's called a suitability standard, meaning you're not selling something that's really inappropriate for that client. Like you're not telling them, hey, you should buy this really risky fund when they're like turning around and going into retirement the next day and need every penny of their investments. Like that's not suitable for that client. So these folks aren't necessarily, they're not financial advisors. They're not there to give you advice. They're there to help you implement an investment strategy. And that's kind of it. So those are the folks that maybe wouldn't be able to say, like, hey, I am held to a fiduciary standard. The very convoluted and complicated part of this is that there's a new law. It's called Regulation Best Interest that was passed, and it holds the broker dealer, which is the institution in that situation, to a best interest standard. So again, like maybe the individual themselves is not held to that standard, they're held to a suitability standard, but the institution, the broker dealer, is held to that best interest standard. So this it's complicated, but generally, like, most people are being held to that standard now. Like the standards have increased over time, so that more and more industry professionals are kind of falling under that loop of, even if they're not a fiduciary, they're being held to that higher standard. You may also come across just insurance agents. Like that's all they do. They sell insurance, and they're licensed to help with specific insurances, licensed by the state usually, not necessarily there to give you financial advice, not necessarily a fiduciary. So if that's the only thing they do, then they're there to sell you a product, and that's about it. They have their own standards that they have to adhere to as well, but it's not going to be at the level of like if someone is providing you financial advice. Beyond that, you have registered investment advisors, which is the firm umbrella or like the institution umbrella that manages assets and investment portfolios, and has investment advisor representatives that are financial advisors, basically. Like that's kind of the layman term for an investment advisor representative, which is generally the people that you think of when you think of a financial advisor. These people are held to a fiduciary standard by the SEC. So when you say, hey, are you a fiduciary? And like Corey and I are like, yes, we are held to a fiduciary standard because that is the language that we use. That's what we mean. Yes, we are investment advisor representatives. That's kind of like the key there. Um, Generally, fees for those folks are based on assets under management. So if we're managing assets, then we're charging based on the amount of assets that we're managing, and there's like a percentage, not on commissions and things like that. Or people may charge fees for advice. Like maybe there's no investment management involved, and we're just offering advice and charging a fee for that advice. And those folks generally help more with general planning, other areas besides investing, like home buying and debt management, cash flow management, all that kind of stuff, and other like long term planning. Like, okay, what are we trying to achieve 30 years down the road? Not just like, I'm going to execute this trade for you. I'm going to buy this investment for you because this is what you've told me you want and it's suitable. So, obviously, a little bit more complicated. But again, a lot of times these things overlap. So, a registered investment advisor and a broker dealer may both be operating under the same sort of umbrella. They may like an investment advisor representative may all just so be like a registered representative, which means they're monitored by multiple regulatory agencies. Like it's all very complicated. But you can ask your advisor or the person that you're trying to work with, are you held to a fiduciary standard? And they should be able to answer that question. And that is a pretty simple question, which I think is why has become kind of the shorthand for like, are you ethical? Because it's the easiest question to ask when everything is so complicated,
Yeah, many
you know?
RIAs are also affiliated with broker-dealers.
Yeah.
And typically this is done for economies of scale. If you're a one or two person financial advising shop, maybe you have a couple support staff members, you're a very small business, it's going to be hard to negotiate selling agreements with every mutual fund and ETF company out there. It's going to be hard to get the best pricing on share classes for your customers. Like, what about compliance oversight? We have a very heavily regulated industry. Do you have to hire your own internal compliance person? Do you outsource that somewhere? So oftentimes you'll do that. You'll link up with a broker dealer for that back office support, resources, compliance oversight, regulatory requirements. In this scenario, ideally, the broker dealer is an independent broker dealer, meaning they're not owned by or affiliated with any specific insurance or investment product companies, because odds are if they have their own products, they're going to strongly encourage their representatives to offer those products to the clients. And not that they're necessarily bad, but you may not be getting the most objective advice. So it can be a little skewed towards one product, company, or family over another. Again, not that that's a bad thing. You can build a very good financial strategy, portfolio, etc., with one company's products, but it just may not be in all circumstances the best for everyone. So having an independent one that has access to a whole slew of options available on the open market at competitive pricing is the ideal uh, scenario. Um, and then whether which category the advisor falls in, again, like Rachelle mentioned, depends somewhat on the licensing, and you can be multiple of them or all of them all at once. You can be a registered representative for a broker dealer and also an investment advisor representative for an RIA. So you have both access to, financial planning, client pays you directly for financial planning or investment management. You also have access to products that are only available on a commissionable basis. Because some products just they're it's more of a transactional thing. It's not part of a portfolio that you would invest and manage on an ongoing basis. It's just I want to buy this specific product because it suits my needs. I want this annuity, for example, because I like the longevity protection of it. And it's just you buy it once, that's it. There's a transaction, that's the end of it. There's no ongoing maintenance or monitoring. It's kind of a set it and forget it thing. Um, so having someone that can have access to that could potentially be beneficial. Um, they could also have insurance licenses to be able to help with various insurances if applicable. So they can wear multiple hats potentially. Again, it can be convoluted, it can be confusing. So, but it is hard to like you can't really pigeonhole everyone who calls themselves a financial advisor into one box, which is unfortunate because like it'd be a lot easier for the consumer if they knew, all right, this is what a financial advisor does, despite, some financial advisors have different roles and responsibilities or do different things despite all calling themselves a financial advisor. Um,
Yeah.
I guess using the medical analogy, it's kind of like, I'm a doctor. Well, are you a medical doctor? Are you a doctor of osteopathy? Are you a dentist? Are you a chiropractor? Do you have a PhD? What type of doctor are you? So you kind of have to go a little bit further to get, a better understanding of what they actually do.
Yeah. When you are kind of searching out a financial professional, there are other qualifications that they can have. People who have done additional work to gain additional knowledge. So the CFP, Certified Financial Planner, is probably the bigger one. And as part of that, like all of these designations and certifications have their own code of ethics as well. So, certified financial planners in their code of ethics, you are required to act in your client's best interest. Same thing with like CFA, a certified financial analyst. You have to require in your client's best interest, require members to act in your client's best interest. I can't speak sometimes,
Diving
but
into those two slightly further. So CFP is certified financial planner. CFA is chartered financial
chartered
analyst, I
financial
believe.
analyst.
So
Yeah.
like if you're looking for ongoing planning, like, hey, I need help with retirement planning, student loan repayment, home buying, education funding for the kids. I want to figure out how do I get from point A to point B as efficiently as possible. Um, the CFP is probably the designation you'd want to look for, the top designation for that field that's all encompassing, and they really harp on the planning process and the steps involved in gathering the data, the information, you know organizing it, analyzing it, coming up with a strategy or plan that suits the client's needs and accomplishes their goals and objectives. And many CFPs also can manage investment portfolios for you. There's also many, that can also offer insurance products if need be. There's not really a barrier to who can claim the CFP. You have to pass a pretty rigorous exam. It's the equivalent. I think they have like 7 college level courses, more or less, and then a big final exam you have to pass. You also have to have at least 3 years of industry experience, or 2 years working under a CFP. So there are definitely some hurdles to jump through, but like anyone can go out and take the CFP exam if they pass the prerequisites. So like an insurance agent could go get their CFP, a stockbroker could go get their CFP, but it does definitely uh, promote financial planning, and every CFP holder is required to act in their client's best interest. Otherwise, they could lose their credentials. CFA is more on the investment management side. So if you're looking for like investment, advanced investment management, investment analytics, understanding of investment products and portfolio structure and design, then that CFA would be the route to go. Now, some hold both. Like we have CFPs who also hold the CFA designation at our firm. So it's, they're good at planning and investment management, which is pretty cool. Um, but I think for most of the people listening here, that CFP, if you're looking for a financial planner, that's probably the first spot. But having at least if the company is also managing investments, having some CFAs on staff could be beneficial as well, just
Hmm.
from a oversight and research standpoint for those portfolios.
Yeah. Yeah. I don't want to like brag. I like how we have it set up at our firm because a lot of our client facing people have, any advanced credentials that they felt would help them practice with their clients. So a lot of CFPs and things like that. But we also have folks that are helping with investment management on the back end that are CFAs. That's really, really helpful because some of that is not necessarily stuff that is helpful with clients. They can come on calls with us and talk to clients about like their investments and things like that, but like the planning piece I think is the most important piece for most of our clients, just having someone in front of them that can help them decide how to use their limited resources in the best way possible. And then the CFAs being on staff to help with like selecting investments and things like that is invaluable. I think it's been very, very helpful for me personally. Yeah.
For sure.
I do think that talking about all the licensing, all of the advanced credentialing you can get, and all of that kind of stuff, it's important, but it's probably not quite as important as like the ethics of the individual that you are in front of. If we're talking about like, are they going to act in my best interest? Like the ethics of that person is probably the most important thing. And that ethical person may be more likely to pursue some of that advanced training, but there's lots of ethical people that don't have advanced credentials and things like that. And there are unethical people that do. It's not necessarily like a cut and dry, like you're a CFP, you're the best, and you're not a CFP. Obviously, you need to like do some more work. Or, there's not any of that going on. So it's not super cut and dry, but I think you can look for those credentials just to give you some sort of evidence or support for that person. I think in our industry, it's important to have oversight because everyone can intend to be ethical and to act in their client's best interest. But having like a second set of eyes on things is really helpful. So, like our broker dealer, for example, helps us a lot with compliance. They help us, when we're doing transfers, as an example, like it's part of the process where we look at the fees in the existing account. We look at the fees that the client will be paying if we move the money here. And we, with the client, decide, okay, with comparing these fees, if it's more costly to manage the money here, is it worth it? Are you getting what you want out of paying that fee? And sometimes it is. It can be very much like, sure, because like at Vanguard, I'm doing it on my own. I'm not paying a lot, but I don't know what I'm doing. I'm not confident in the results. I don't feel good about it, and I would like some help. And so I'm willing to pay an advisor a little bit more to know that it's in good hands and that I have some assistance with it. And those are conversations that we generally have with our clients. And when we do those fee disclosures, that's a really important part of it. Like, hey, it forces us to look at those other accounts that people already have and to say, like, what are the fees here? Like, and sometimes it's like, oh, you're paying a lot to this advisor who's not doing anything for you. Like they barely talk to you. Maybe once or twice a year, they talk to you about your investments and not about anything else. And is that really what you're wanting and looking for? Like, or is it really that you were looking for a financial planner and you got an investment manager? And that happens sometimes too. So, all of those things are really important when we're thinking about compliance, and ethics is just having some oversight, having a person that really is trying to do what's in your best interest, whether they have like lots and lots of credentials or they just have basic licenses in place. I think either way, it can, yeah, the individual person is going to be more important.
Yeah. Obviously, we have regulatory bodies, the big ones being FINRA and the SEC. Um, they generally crack down on the really egregious behavior. But, like Rachelle mentioned, there's kind of those blurred lines of, is this ethical? Is it not? How ethical is the individual that you're working with? Are they honest? Are they open? Are they transparent? Uh,
Mm-hmm.
do you, do you feel good when working with them, or do you feel like they're a little sleazy and scummy? Like, you know, sometimes that gut feeling can, tell you all you need to know. But they should, definitely be willing to answer any difficult, or they shouldn't be difficult questions about costs, fees, etc. Like, hey, what am I paying you? What does this cost me? What does that cost me? Like, I mean, it's pretty easy. It should be pretty easy to uh, uh, explain what that is, show what that is, and it shouldn't really be hidden anywhere either. Like if you're paying for financial planning or investment management, again, Rochelle and I are a little biased, but because we operate under this model, but like you should be able to see what your investment management costs are on your account statements pretty clearly. If you have mutual funds or ETFs, it's easy to look up what those internal expenses are because you'd pay them whether you're using an advisor or not to oversee the portfolio. And if you're paying a flat retainer, like that's pretty straightforward as well. You should know what you're paying on an annual or monthly or quarterly basis, whatever that is.
Yeah.
Um,
I
how
will
do
say
we
that one
go ahead?
problem that I think I've come across with clients is that for us, for you and me, Corey, all of the fees are like super clear. We're like, it's on your statement. Like we talked about it at the beginning, when we set up your accounts, and all of your fees are on your statements if we're managing investments, and you know what you're paying monthly for a retainer if you're doing that. Like we feel like it's very straightforward because we look at it and we do it every day. And I think that clients sometimes feel like it's difficult to ask the questions because they feel like maybe they should know. But if you don't know, like completely understandable. Like it's just you get a statement and it's 15 pages. Like where are the fees on the statement? And so just feel like it is okay to ask those questions. Yes, you should be able to find them. You should be able to see them somewhere, but you may not know exactly where to look, and it's fine to ask those questions. So that's an important part because I do think that sometimes I get surprised by questions like that because I'm like, don't you already know? But but sometimes people don't. Sometimes they're really not quite clear about that. And that's fine. You're not the only one. That's for darn sure.
Yeah, I mean, it is easy to forget if you covered it once 10 years ago. Like, I get it. So yeah, please, if there's any questions, ask, um, and we'll get you the answer. Let's
Absolutely.
see. How do we find the most qualified, trustworthy financial professional out there? Referrals are probably
Oh,
a good
oh, you're
place to
asking
start.
me. Yeah, I think referrals. I think that's probably the best way, honestly. If someone is saying, "Hey, I work with this person, this professional, and I would recommend that you work with them as well because I think they're great." That's the perfect place to start. Like like that's great. Like you know someone that you trust and they trust this person. It's not a done deal at that point. It may not be a good fit for you, but that is the best place to start because you already know someone that's had a good relationship with them. I would say like when you start working with someone, like trust your gut, like Corey was talking about. Like if they seem like it seems a little off, it's probably not a good fit. Maybe that person might be a good fit for someone else, but maybe it's not for you if you just don't feel really good about it. Like you should feel good about it. Potentially talk to more than one financial professional if you're new to planning so that you can get an idea of the variations and how people approach planning because it's not the same from person to person. Like how people interact with clients is different, how people manage investments is different. And so it can be a good idea to just talk to a couple of different people and see like, oh, this feels like a better fit than this person. And you can get a good sense of that over just like one meeting or something. Before talking to anyone, always ask about fees. Like most people will at least, have a meeting with you before charging fees, but you can clarify that ahead of time for sure. And they should be able to do that, like connect with you, make sure it's a good fit before there's any sort of cost involved.
Yeah, I mean, a lot of it just boils down to the communication style. Are you on the same
Mm-hmm.
wavelength or are you just on different planets here? Like, I kind of equate it to like finding a therapist. You need one you're comfortable talking with. Personal finance can get very personal. A lot of emotions can get evoked. So being
Especially if you
comfortable,
have a partner.
yeah, being able to be open and honest and have conversations comfortably, or even if they're a little uncomfortable, but being able to have them nonetheless with your financial planner is ideal. Um, and vice versa. You need to be able to digest what they communicate to you and the manner they communicate it. And if it works for you, great. But like I know I'd like to think most of the clients who've been working with me for many years are happy and like me. I also know that I'm not going to be friends with everyone. I'm not going to, like, my communication style might not work for everybody. Like, I can't make
Mhm.
8 billion people on the planet happy. I, you know, but if I can work with 100 or so and it works for them, then fantastic. So,
That's so true. Yeah, I think that there's such a variation in how people like talk and how they want to be talked to, and the
exactly.
kind of information that they want to hear and all of that kind of stuff. And that's important to consider.
Frequency too, like, a lot of
Yeah.
it's over email now, like how quickly they respond. Like, are you someone that wants an instant callback, or are you content waiting 3 days to get an email response? Everyone's a little different. So,
And probably somewhere in between those two
do you
extremes.
like repeated reminders, or do you want someone to send you an email once and not bother you anymore because it's on your to-do list and you'll get it done when you get it done? I
Hmm.
mean, so
Yep,
everyone's different.
absolutely. Well, thank you for listening, everyone. I think, if this is something you're thinking about, always feel free to ask questions and things like that. There's lots of information out there about like what it means to be a fiduciary. And I'm sure if you've heard that word before, it's probably because you read it somewhere. But we're here doing our best. Let us know if you need anything.
Have a good one. We'll see you next time.